Welcome to the StockMinter.com here in the Black Hills of South Dakota. I'm your Stockminer, Brian Johnson, and we got that move up today that we were kind of tentatively watching yesterday. The Bears had it kind of stuck at a place of overhead support, but I, of course, made mention if you can't beat it, gap it, and watch to see where the gaps happen, if they happen in the morning. Sure enough, up and over resistance and on their way to the upside, right into further overhead resistance. So the lines are working beautifully on the chart as we have them. I'm really happy with the way things have gone. Made for some really, actually pretty easy trading for the most part on breaks of some of these lines. And today, okay, a little bit more tricky. I agree with the gap up to start the day, but the overall feel was bullish. It remained bullish. Overnight, and then of course in the morning we got the gap up and over resistance, taking us to these overhead levels. Where is this at? Kind of sitting in the middle of nowhere. We're in limbo up here. Well, not really. If we take a look at the daily, you'll see right to the overhead resistance I have marked. So working very well here on the Dow. Quite a run so far by the bulls, but in true bullish fashion as we've seen over the past umpteen months. Up, sideways, and up yet again. So the next bigger level to beat, kind of getting up and over this line, puts us into kind of a new stratosphere for the bulls. Watching tomorrow to see if we can accomplish that coming into the end of the week. Couple days left, Thursday and Friday. We'll see if the bulls can actually accomplish that without some sort of pause break by the Bears. The best way to do it would be another gap, so we watch that again tomorrow. Let's see if the gap would hold, though. Watch for a gap up, but make sure it's going to hold. I'd be very cautious the first 15 minutes or so of the trading day, just to make sure that would hold. Tomorrow on a gap up, I'd be a little bit more cautious about if we saw one there. Make sure the sellers don't come pouring in at that point. But great move so far by the bulls, showing their overall strength. From this standpoint, looks like we have to start returning to the bullish feel again. Now, a pullback is definitely in order. Doesn't have to come tomorrow, but we definitely will see a pullback, I would assume. Maybe something in the regards of sideways motion. That might come again, as I said, probably tomorrow. If we see any kind of sideways action, that might come tomorrow. But looking to see if we can hold up in these upper areas without the bears coming back in. Even if they do come in, look for these lower levels now to hold on any kind of a retest. So we're stuck between a range of 12.3 and 12.4, looking for those areas to break tomorrow. NASDAQ then not quite as high as what we're seeing in the Dow. Dow's been very good lately. It's been very strong. NASDAQ's been a little bit behind it, and here the index 100 from a daily perspective putting in a little bit of a hammer candle. Very sloppy. This chart to me is just sloppy, to say the least. My push here was really above the 2340-ish mark for any move to the upside. We tapped it today, but of course, we didn't really try to stress any kind of a push up and over it. That is still the mark to be watching to the upside. Then way down here for the downside, this NASDAQ has been really just kind of a nasty little chart happening here within it. I like and have liked to follow the NASDAQ or the SPX and the Dow lately. They've been by far the easier markets to trade when it comes to both up and down motions. Why? Because they're following and behaving with resistance levels very nicely so far. So gap up, run down, gap back up, kind of finish with this little hammerish type candle on the day. Means nothing right here where it's at for the most part. Breaks back below 50 are where the bears want to get it. They want to get it trapped back below into these moving averages again. But the bulls have done a fantastic job of being able to not only get it up, but keep it up here. Maybe pullbacks to sideways moves seem to be the more common action. Coming into the week now, you can see too where the weekly is starting to kind of form itself into a good-looking bullish type candle. Up not quite 1% though on the week, up 20 points, but not quite 1%. But looking to stay above that 20-week moving average. So if we do see any bearishness come into the markets next couple of days, this is your lower level to watch as well on the larger time frames. From the SPX version right into this beautiful overhead resistance area. Stopping, halting, pausing. We've just had such beautiful moves around these lines that we've had drawn in just made for some good trading up and over these overhead areas here, have led to some nice trading as well intraday if you're an intraday trader. Otherwise, swing trading has been a bit more complicated unless you were in back on some of these breaks of these levels here and have been holding for a while. Keep in mind we are getting kind of stretched up here, so that pullback is definitely in order. Once again, does not have to happen tomorrow, but this overhead area of 1330, 1335-ish or so, that's your next more major area now to watch within the SPX. Things started to slow down today towards the end of it. I'll be curious to see if the bulls can find their strength again tomorrow. It's been a nice run. Straight up, sideways, once again straight up. So any kind of a pullback, looking to see if we retest some of these levels. Even pullbacks, though, into 1290 don't get me now necessarily out of the bullish range. We're still trapped in that kind of that not really bullish, not really bearish range. Definitely leaning more towards bullish now, though, guys. This bounce here has been very good from a bull standpoint. Coming right into the end of the month, which ends at the end of trading day tomorrow. Be something else to be watching for, to see if, they call it window dressing, if you will, coming into the end of March. Sometimes that's what you see when we enter the end of a quarter, and that's what this will be then. First quarter will be done as of tomorrow. VIX also down as well today, holding these lines, so there is still support down here, but you can start to make this head and shoulders pattern type looking thing on the VIX. I'm not too concerned. Point is, we're back below 19. So if it'll stay and wander around here, it's fine. It doesn't have to drop now. At this point, it does not have to drop if the markets go up. As long as it just stays sideways, it's still more bullish than anything. This 19 level is still the area I want to retake to see more bearish action within the markets. But right now, once again, pouring out of the markets. Fear just not there from an overall option standpoint anyway, and that usually is a good reflection on what the markets are doing as well. Apple went nowhere today. It was down $2.33, but we're just trapped within this range. Still looking for breaks below here, breaks above here. Really pretty simple here from a trading standpoint. Below here, above here, giving you opportunities to trade. Watch for gaps, of course. See where those go in the mornings, whether it be tomorrow morning, Friday morning, whatever. I'll be watching this one very closely, as is the NAS, the NDX 100 chart. This is the same type of look. Just, it's really ugly right now. I mean, we've had good pushes up and into resistance, but then look what we get. We get this gap up and above, which was nice. It held here, this lower support, but now it's just since then been choppy. Holding lower support, nice. Moving sideways, though, and from an intraday perspective, it's been tough. Some opportunities on a couple of these days to make a little bit of money, but overall, from a swing trader's perspective, if you're looking to hold Apple for the long term, this has been a little bit nail biter in this area, because it's just not going anywhere yet again. Let me just reassure you, though, as long as these lower support lines hold, Apple's fine. It's just fine for the time being. It's below here and above here. Those are your marks to be watching on Apple going forward. Same thing on the weekly. You can see not really going anywhere. Down about 1% for the week. Overall, about an 8-point move from high to low for the entire week. But you can see, bigger picture, candle's going nowhere so far. So Apple's just consolidating right here, kind of coiling up for whatever that next big move is going to be. FAS then up. Look at this. Gap up and where? Above that overhead resistance area we talked about, above that 30 mark. This was actually a pretty playable setup right here. Held 30 beautifully before taking off to the upside. So trades up and over 30 made you some money today. 30, 40 cents maybe on that particular trade. If you were, perfect in your trading today, then you might have made as much as 60, 70 cents or so by the time it was all over with. But up and over 30 was definitely my trade to the long side. Below these levels, not having been broke, still remain my short entries going forward. If you're not in this thing yet, you're looking for pushes up and over 31 for your next opportunity to go long. FAZ did get below $40. That was my short, and by the end of the day, you were rich. You made 2 cents on the trade. Actually, more than likely broke even or lost maybe a couple pennies if you actually got out. But point being, we did get below that $40 mark, which was my short, and kind of stayed there by the time it was all said and done. So further pushes to the downside, I still like it below that 40-ish mark coming into tomorrow morning. Depends on if we gap or not. If this thing gaps down, I'd kind of wait on it for, breaks of maybe 38. And then to the upside, it's still above 42, 40, now 43 still for me to the upside on FAZ. Okay, that'll do it for today's video. Thursday, 9 p.m. Eastern Time, Elliott Wave webinar. Still time to get in. It's a good chance to get in. I'll say again, if you're not sure if you're going to be there, you got something going on, it's okay. If you sign up for the webinar and you're not present, I'll take like a roll to see who's there. And if you can't make it for one reason or another, it's not a big deal. You're not out anything. I'll go ahead and refund that money to your credit card. It's not a big deal. It's very simple for me to do on my end with PayPal. As big of a headache as they are sometimes, they also have some nice features that make it very, very user-friendly, and that is one of them, refunding people's money. That's a good thing sometimes. So sign up, get your money in. If you don't make it, we can refund that money, and try out the newsletter, guys. Last week I had some, we made a little bit of money. I mean, we basically moved sideways, and we didn't go anywhere anywhere major on any of the on any of the picks I had last week, but this week so far, very, very happy with the turnout. I've got one that's up about 3 to 4%, one call that's up 5%, and I've got one call in particular I've held now for about the last couple weeks, waiting for it to break. Finally got that break this week, and it is up 14% already this week alone. So, as I said before, I'm not perfect. I don't get it right all the time. Sometimes my picks move a lot. Sometimes they move very little. Last week was one of those weeks where it didn't move a whole lot, but this week we're right back on track. We're making good money. So from the indices standpoint, I've had some really good calls from an indices standpoint for my subscribers. To pick up some money, and then of course the individual stocks have also made them money. So we've done very well this week. Well, definitely worth your time, guys. It's $1 a day, big deal. $1 a day for the opportunity to do a lot less work during the course of your week and get well thought, well picked stocks to look at from one day to the next. And these aren't only for day trades. A lot of these have been turning into very nice swing trades where we've been able to hold them for 2-3 days at a time, 4 days at a time. And I love those type of trades, don't get me wrong. I like to day trade, but I don't want you guys to mistake the fact that I really enjoy swing trading, because managing those trades is so much easier. And that's what a lot of my students that come to me, they want to learn how to swing trade. They're not always necessarily interested in day trading. They want to know how to swing trade. They want to know, how do I get in and hold for a couple days, a couple weeks, a couple months at a time? I'm good with that. I love those type of trades. So I'm not just about day trading. I'm about all kinds of trading. Forex, futures, stocks, 1 day holds, 1 month holds, all of it. All right, so check it out. $28, $1 a day, well worth your time. And the Elliott Wave webinar tomorrow night, 9 p.m. Eastern. See you again, as always, tomorrow. Bye.